Hi, let me show you a performance analysis of Cimb Islamic Bank Berhad from 2018 to 2022. Let's get started. So, what is Cimb Islamic actually? Cimb Islamic is a subsidiary of Cimb Group Holdings Berhad in Malaysia. Cimb Islamic also offer a Sharia-compliant product and services, and adhering to Sharia principle, and avoid usury, riba, gharar and maisar. The study analyzes Cimb Malaysia's financial performance spanning 2018 to 2022 aims to offer valuable insights for decision-makers, stakeholders, and investors. Chart here shows a profitability ratio involving return on asset, return on equity, return on deposit, net profit margin, and profit expense ratio from 2018 to 2022. Firstly, we have return on asset. Cimb's return on assets from 2018 to 2022 shows fluctuations, peaking in 2019 and decreasing in 2020, but generally efficient in profit generation, possibly influenced by economic factors. Next is a return on equity. From 2018 to 2022, Cimb Islamic Bank Berhad's return on equity fluctuated, with 2019 rising and 2020 decreasing, then climbing in 2021 and 2022, showing favorable shareholder returns. As for return on deposit inquiry from 2018 to 2022 reveals a good pattern, with variations in 2020, recovery in 2021, and further improvement in 2022. Meanwhile, for net profit margin, from 2018 to 2022 showed a positive trend, increasing from 2018 to 2021, but a decline in 2022 raises concerns about revenue generation. Lastly, in profitability is a profit-expense ratio. The analysis of profit-expense ratios from 2018 to 2022 reveals fluctuations in profitability, with decreases in 2019 and 2020 indicating challenges, and positive improvement in 2021. Here is a liquidity ratio that consists quick ratio, cash deposit ratio, loan deposit ratio, and current ratio. For current ratio, the company's current ratio from 2018 to 2021 shows a positive liquidity position, but discrepancies in 2019 and 2020 suggest a slight decline in short-term debt and liability coverage. For loan deposit ratio, the bank's stable performance from 2018 to 2021, with a lower loan-to-deposit ratio, raises concerns about potential liquidity challenges, requiring vigilant monitoring and strategic adjustments. Next is a cash deposit ratio. The cash deposit ratio and return on deposit analysis from 2018 to 2022 reveal liquidity fluctuations, with a decrease in 2019 and an increase in 2020, affecting short-term obligations. Meanwhile, for quick ratio, Cimb's quick ratios from 2018 to 2022 show good liquidity and short-term obligations coverage, but 2022 has high debt necessitates a detailed financial statement analysis for a comprehensive view. Lastly, we have risk analysis, consisting of debt-equity ratio, debt-to-total asset ratio, equity multiplier ratio, and loan-to-deposit ratio. Now for the debt-equity ratio, Cimb's financial leverage improved from 2018 to 2020, but a reversal in 2021 indicates high leverage, posing challenges in covering liabilities, prompting investors and stakeholders to monitor ratios. Then, we have debt-to-total asset ratio. The data suggests potential errors, such as a 1 in 2018 and 2021, but a positive trend from 2019 to 2022 suggests lower financial risk and prudent debt use. Moreover, is equity multiplier ratio. Cimb Bank's equity multiplier ratio analysis from 2018 to 2022 reveals a conservative financing strategy, relying on shareholders' equity for stability and a well-balanced capital structure, indicating a stable financial position. Last but not least is a loan-to-deposit ratio. It shows fluctuations in lending and deposit activities, with a decline in 2021 and 2022 suggesting a more conservative funding structure. However, a low ratio in 2022 raises liquidity concerns. Finally, as for the summarization, while Cimb Bank has demonstrated stability and efficiency in a number of areas, careful attention is required, notably in managing liquidity issues and addressing fluctuations in key ratios that may have an impact on the bank's financial health. These ratios will need to be monitored over time by stakeholders in order to assess the bank's performance and risk. That's all from me. See you next time.